Brilliant. Okay, so we're going to get started now. So I just wanted to give a quick introduction really to this series and to why we're doing it. We've teamed up with Curtain Call, great partners of ours, and fantastic hub for people within the entertainment, live events industries. So it's been a tough month. It's been a tough year really for everybody. I think we all know that, and it's just been what it is, I suppose. But it's really, I think, been difficult to witness, the industry that we all know and love struggle through this. And we all want to get back to doing what we do best, putting on shows, entertaining crowds, and generally bringing joy to our audiences. But in the meantime, I think it's also imperative that we use this time to our best effect, be it learning new skills, getting on top of our finances, as we're going to go through in this session, or working on things like mental well-being. And so all of these sessions are just designed for us to really make the best of the time that we have ahead of us, and carve out a more optimistic few months ahead of us, and ready for us to return back to doing what we do best and ready to return to normality. So we've got 4 sessions lined up. This one is the first. And we also have 3 more throughout the rest of January, each taking place on Thursday at the same time. I'll explain more about what the rest of the topics will be at the end of this session. But today's is starting on finance. So, and then we can move on to those sessions and more topics as we go on from there. So, it's really important for us to make sure that, we're all looking after each other and supporting the industry we love, and just making sure we're in the best possible place to make 2021 the best possible year it can be for all of us as an industry and as individuals. So without further ado, I will pass you on to our co-host and our panelists. So Matt and JD, I'd like to bring you into the webinar.
Hello, everybody. Thanks, Mark. Thanks, Mark. Yeah, as he says, we're set up these sessions to provide support and advice to many freelancers out there working in entertainment events. So thanks, everybody, for joining us today. My name's Matt Humphrey. I'm the co-founder of Curtain Call and a freelance photographer. And joining us today is JD Rainey, founder of Finmo and a self-employment tax guru. So we're going to be talking through some of the main kind of hiccups and problem areas that self-employed freelancers may have when it comes to managing finances and tax liabilities and all of that side of our lives. And then we'll be answering specific questions. So thank you to everybody who is here and to everybody who's already sent in some questions. So we've disabled chat for this webinar. But we have enabled the Q&A. You'll see that at the bottom of your screens. Please feel free at any point to send through any questions you might have, and we'll do our best to tackle as many as possible. So without further ado, I'd like to welcome JD. How you doing?
Pretty good. How are you?
I'm all right, thank you. Not so bad. So maybe you could introduce yourself and a little bit about your background and kind of why you set up Finmo and how you got to be the guru that you are.
Yeah. So I didn't really go into school thinking that I was going to be a self-employed tax guru. Kind of wound up here through some twists and turns. And if you couldn't tell, I'm also not from here. My wife and I have been here close to 5 years now. And in that time, she's a self-employed she's also self-employed. She's a voiceover artist.
Right.
And so that's how we started down this path. But my background is 20 years in banking and finance, and have run a couple companies, have built a couple companies, and in doing my wife's taxes and going through that pain, I guess we would call it, we realized that there were not a lot of good solutions for self-employed people, specifically sole traders. And we figured that there's got to be an easier way. And so I decided to build Finmo, and we've been going for about 3 years now. And we're a tax solution for specifically for sole traders and people with side income.
Excellent. Yeah, so I mean, you and I kind of met just over a year ago, I guess, in that month or so before Christmas that some people call Advent. I like to refer to it as denial, not just about organising Christmas, but specifically in regards to tax, because I've been self-employed for several years. How can you avoid that kind of nightmare countdown period? Is there a way around it?
There's nothing I can do for you to make you to help you. I think a lot of it, unfortunately, the life of a freelancer and the life of somebody who's self-employed, being your own boss has a lot of benefits. It also has a lot of downsides, and I think one of those downsides is you have to force yourself to be pretty disciplined sometimes. And if you're a wait to the last minute person, there's nobody on your back saying, get this done. Unless, of course, you sign up for Finmo and we send you emails going, hey, you should probably get this done. But for a lot of people, they'll wait no matter what. Easiest way to do it is to make sure that you're tracking stuff throughout the year. So schedule time once a month, go through your income and expenses, because about 70 to 80% of the job of doing taxes and the job of running your business is about making sure that you're tracking your income and expenses and knowing what your income statement looks like. So your top line turnover, your expenses, and your net income, your taxable income, as HMRC calls it. So as best you can, stay on top of everything, and that'll get you most of the way there.
So I mean, you've already mentioned a few things, but in terms of the tracking income and expenses, I mean, aside from taxes, why is that important?
For a couple of reasons. I think what we're getting into a little bit is like the basics of running a business. And if you have a small business, there are three main statements, I guess you could call them, that you would produce as a small business. One is your balance sheet, one is your income statement, and one is your cash flow statement. As a self-employed person, it gets a little bit simpler, which they start to blend together a little bit. You don't really have a lot of balance sheet stuff, so you don't have a ton of assets. I mean, maybe you as a photographer might have your cameras, but you're probably not taking out a ton of loans to run your business. So there's not a ton of liabilities. So that really doesn't matter so much. Your income statement, your cash flow statement are a little bit blended because self-employed people do what's something called cash-based accounting, which means that as the money comes in, that's income, and as the money goes out, that's expenses. There's traditional accounting, which once you, as an individual or as a business, you get over about 150K. If you start making more than that, you should start thinking about traditional accounting. But the majority, vast majority, 98% of self-employed people will use cash-based accounting. And so what it comes down to is those three things get boiled down to income and expenses. And that's what drives your day to day. Is you want your income to be higher than your expenses, and what's left over is the money that you have to spend. Now, not all of it, because HMRC says what's left over we get to tax. But that's a little bit of the gray area that is taxes. Is what is an expense, what is an income, what do I have to tell HMRC about, and how do we get there? Which is what we help people with.
Yeah, sure. And so for people kind of starting out in the business, I assume there might be a few people watching this that are in that position. What are the kind of main things that would be a good thing to kind of keep an eye out for as a freelancer, as a self-employed person?
Well, I think from a tax perspective, number one is you need to get your UTR number. So you need to register with HMRC. If this is the first time you file taxes and you haven't gotten your UTR number, as soon as this is over, after, of course, you sign up for Finmo, kidding. But to get onto the HMRC website, because it takes about 2 weeks for them.
What's the UTR number?
Unique tax reference number. Okay. So that you need that to file your self-assessment. It takes about 2 weeks for them to mail it to you. They mail it, they don't email it, which is painful. And if you ever lose it, you have to get it remailed to you. So I would suggest when you get it, take a picture of it, keep it on your phone, put it on your computer, email it to yourself, make sure you don't lose it, put it somewhere. So that's I think step one. But
it's just about enough time then before this next tax deadline to do that, isn't it?
Right. The 31st of January is the big day. We are certainly very busy over at Finmo. But of course, I had to spend time with you to do this. But I think outside of taxes, to really understand I mean, I think there's a lot of people who look at starting a business and look at becoming self-employed. There's a bit of I don't know, it looks really good. You see all your friends like, oh, being my own boss. There's a lot of things out there on the internet, et cetera, that just say how great self-employment is. But at the end of the day, from a finance perspective, I'm going to speak today from a finance perspective because you've got a lot of other experts in this series who are going to talk about other things. But from a finance perspective, it is all about you make some money, you spend some money, and you want the money that you make to be more than the money that you spend. So there's a lot of people who use Facebook and they pay for Facebook or they pay for Google ads, or they go out, they spend a lot of money trying to find clients, they subcontract stuff. And so you end up having income, but the question is, do the expenses that you have, that you spend money on, is it less than what your total income is, or is it more? Because you want, at the end of the day, you want to make sure that you're making money, and you want to make sure that you're in a good financial position. Now, as everybody knows, over the last 9 months or whatever it is, has been super tough. I mean, I think self-employed people have had it worse than everybody, and so or as bad as anybody else out there. But making sure you have something off on the side, like, that income minus expenses, you don't want to spend everything that you're left with. And so you need to save some money for slow times. You need to save some money for taxes. You're going to have up months and you're going to have down months. And when you have up months, don't go out and buy a new car. Don't quite do that yet, especially as you start out. You're going to feel like you're flush with cash. But everybody's got up months and down months, so make sure that you plan for that as best you can.
Yeah, it's a good point, actually, in terms of kind of keeping money aside, especially for the tax payments. And given, I know we don't want to focus too much on the negative or the situation that we're in, but there's a lot of people who most likely have kind of dipped into those savings that they were keeping for their tax. With an eye on that and looking towards this next kind of tax return that's due, well, the return itself is due on the 31st of January. The payment can be deferred. Am I right in thinking that?
Correct. So the payment would normally be due when you submit your taxes on the 31st. HMRC understands. Surprisingly, HMRC is pretty reasonable. I mean, they want their money, that's for sure. I mean, let's just get that out of the way.
Mm-hmm.
Like they're gonna make sure that if you make money, that they're gonna be able to tax it. However, they have been really good from a understanding point of view, where they understand what people are going through. They're willing to work with you. They're willing to defer payments. They're willing to do payment plans. There have been some calls, especially recently, to have people just automatically defer those payments that are coming out. I don't think there's been a decision on that. I haven't heard anything in the last 24, 48 hours, but there have been some calls for it. But they are reasonable in that they will, if you need to do a payment plan, they'll do a payment plan. I mean, at the end of the day, they want everybody to make sure that they don't want to put anybody in straits, because if you can't continue to make money, then they can't continue to make money. So it's in their best interest, because they want to get paid at the end of the day. It's in their best interest to make sure that you can continue working and you can continue making money. I think Ben just put an article that we wrote in the chat about that goes into a little bit more detail around deferring some, and Ben, who works with us at Finmo, he might be posting a few things in the chat every once in a while. If I talk about something, he may reference it, and if we've written about it, which we've written about a lot of things, he'll probably throw an article in there. There's some good information in there if you wanted to take a look at it.
Yeah, keep an eye on the chat for those links. Regarding the deferment and the kind of relationship with HMRC, I've heard anecdotally from other people that have had to kind of defer their payments, for example, that actually it kind of backs up what you were saying, that they do understand the situation that people are in, especially this year. And I think as long as you're open and you communicate that with them and say, look, here's the return, can't make the payment just yet, so can we set up a payment plan? They are quite forgiving in that respect.
That's right. I think the worst thing that you can do is what will, unfortunately, what you want to do, which is just stick your head in the sand and hope it goes away. I think one of the things that HMRC has been consistent about is they say, look, file, make sure you file. Above all things, get your self-assessment to us to tell us how much you made. You don't want to incur any penalties. You certainly don't want to wait long enough where you start incurring interest on potential future payments. That stuff starts to add up very, very quickly. So more than anything, file. And then if you need to defer your payments, then they'll work with you to do that.
And better to work on deferring the payments rather than getting another loan out, for example, to pay off the tax.
That's right.
That's right. So I mean, okay. So I mean, personally, I've been a freelancer now for quite a while, but I'm also a company director, and I suspect there's quite a few people who could be watching this in a similar position. Those are two quite different circumstances. Do you have any advice on what we kind of need to be aware of, what the complexities are?
So you're asking specifically as a company director, or because you have both of these things?
Because of the two, and then maybe.
Yeah, I think the thing with limited companies, it's a question we get a lot, which is when should I go limited? Which is the first question, and then two is like, how does that impact my taxes? I think one of the things that's come out recently, especially with the self-employed income support scheme, the SEISS. Is that the people who have their own limited companies and who pay themselves through dividends, they got the short end of the stick a little bit because they paid themselves through dividends and not as it wasn't actual income. So it's something that's, I mean, there's not a lot of us that could have foresaw this before, but certainly from the limited company standpoint, you're going to want to make sure you understand where the tax breaks are in terms of what you can pay yourself and how much tax you have and what the corporate tax are, and to do your CT 600, et cetera. We actually think that there's a lot of accountants who are out there who sometimes push people into, or try and push people into, becoming a limited company too soon, mostly because accountants can charge more because it's more expensive. There's more to do. There's 2 sets of books to keep. You need a business bank account. If you're already a limited company director, I mean, make sure that you have your stuff in order. Make sure you understand what the rules are. If you're thinking about becoming one, take a long, hard look at that and really make sure that it's the right decision for you, and don't have it just be about money or taxes. Make sure like the liability stuff is that you understand what the differences are from a liability standpoint and what changes you would have to make, et cetera.
Yeah, it's a good point actually to decide when the right time is for you, because it's different for everybody. I guess the same could be said also about being VAT registered. And whether you can be VAT registered as a sole trader, and what are the complexities of that?
So being VAT registered, so you can be VAT registered whenever you want, and you don't have to be a company. You don't have to be. It's for both sole traders and for companies. However, you don't have to be VAT registered until you hit about 85K. The VAT registration comes regardless of whether you're a sole trader or whether you're a company. However, if you are making turnover more than 85K, you may want to think about becoming a company. We normally say once you start making above 65, 70K, you should start thinking about a company. And then, of course, once you make above 85, you have to be VAT registered. HMRC says that once you get to between 80 and 85K that you should become VAT registered, because the last thing you want to do is accidentally make more than 85K. If you do accidentally make more than 85K, you can call HMRC and say, hey, I accidentally made too much money this year. And they'll give you a one-time reprieve on the VAT stuff, but they won't do it a second time. So keep that in mind if you're in and around that amount, to make sure that and if you do get close to it, I mean, again, we've talked about cash-based accounting before. If it's like the end of March and the end of the tax year is coming, call some of your clients and be like, don't pay me until mid-April, because it's all about the cash coming in, to make sure that you stay under that mark, because it is a hard and fast rule.
Because obviously you then have to pay that money back out again, don't you? So,
okay.
Yeah. So a question came in just while you were talking then, from Julian, who's asking, could you explain the difference between being a sole trader and a company?
Yeah. So a sole trader is you're doing work by yourself. You're doing work under your own name. There's one entity. When you are a company, technically you're not a company. You are still yourself, but then there's just a second entity, which is your company, and you are a director of that company. So the difference between the two is the difference between you have to deal with one person or two entities. So it's either I deal with you or I deal with your entity, and then who then deals with you as a director. So from a tax standpoint, the difference, they're very, very different. The way you can, so as an individual, if you could work for your own company, because there's two different entities, you could be an employee of your own company, and so you pay yourself through payroll. You would be a director of your own company, so you can pay yourself dividends. Dividends are taxed differently than income is. When you become a company, when you start a company, and so it's you and your company, your taxes and your structure of how you do work becomes much, much more complex, which is why accountants love it, because they say, look, we've got two different things. We got to track all your stuff for your company. We got to track all your stuff for you. Mm-hmm. And so I do think that you really increase your complexity. HMRC says that as a company, you have to have a separate set of books. You have to have a separate bank account. Unfortunately, there's a lot of bank accounts out there that say they're a business bank account and they cost money. So you'll end up paying £6-7 a month, which is, at the end of the day, it's almost 100 quid a year. And especially now, I mean, who's got that to throw around? So the complexity goes up pretty dramatically. You do have a lot of liability protection. So if you're in the type of a job where you could get sued, they'll sue your company, not you. So you don't have to like if you screw something up and it's your fault and your company gets sued, then the company could file for bankruptcy and you would be protected individually. Mm-hmm. If you're a sole trader, they just end up suing you. But a lot of times, the majority of people don't have that sort of the potential liability in their job. Yeah, so sure. They'll opt to do the sole trader route.
Great, thank you. Just to go back onto the VAT question, because somebody said it might be worth pointing out that the VAT threshold of 85K is through any 12-month rolling period, not necessarily the tax year.
Thank you. That is a good way to point that out.
Great. Yeah. So in terms of being a PA employee, this is another question that's just come in, as well as a part-time freelancer and somebody that works from home, how can they claim in-house expenses?
So I guess the question is around if I have two jobs, right? If I'm an employee of a company and like you, maybe you take pictures on the side, or maybe you're an engineer and you do some stuff for some friends and they pay you. So that happens all the time. We actually think that there's about 3 to 3.5 million people in the UK who are employees and then have, well, I hate the word side hustle, but for lack of a better term, a side hustle or a side job. And so the question always becomes like, well, it's just kind of my side thing. Do I really need to file taxes? So the answer is most likely you have to file taxes. HMRC gives you the trading allowance, which is £1,000. So if you don't make a ton of money and on the side, let's say you make 500 quid on a one-off thing for the year, you don't have to file. Unless you make more than £1,000 outside of it, you wouldn't have to file. Outside of that, as a PAYE person, one of the things we get questioned on a lot is, well, I made 6,000 in my side thing, so I heard that the first 12,500 is tax free, is that we don't have to pay any income tax. And so the way that HMRC looks at that is it's a combined number. And when you file your self-assessment as somebody who has a side hustle or a side job, you have to include your PAYE as well. And so you get something called a P45 or P60 at the end of the year. For those people who have only had PAYE jobs forever, you probably just toss it or disregard it. But if you do end up having, but you do need it for your next job if you ever leave your company. But if you do end up having side income, you'll need to tell HMRC about your total and your PAYE income, and then anything you make on the side is viewed as in addition to your PAYE. So through PAYE, you get the $12,500, the first $12,500 tax free. That's baked into your tax code. And then on top of that, you then have to account for all this extra income. You get your trading allowance. If you wanted to write off expenses, if you make a bunch of money on the side, you can choose to ignore the trading allowance and write off expenses instead, which you can start to claim a lot more things.
Is it? It's one or the other, is it?
It is one or the other.
Okay.
Yeah. So you don't get the trading allowance if you claim expenses on top of it. And so you would end up being able to claim a lot more. If you made a lot more on the side, then you could potentially claim expenses on top of that.
So the whole process of it, I've started to get into a bit of a rhythm now, 12 years in, but obviously the more frequently you're able to kind of start accounting for those income and expenses. And now I've got to say, it's super easy. I'm on Starling Bank, which is a great kind of digital online bank, and it just, it integrates really easily with a load of like financial apps like Finmo as well.
I mean, I'll touch on some new bank accounts that have come out. So
yeah, it could be helpful.
I'm sure a lot of people have heard about Monzo, have heard about Starling. You might have heard of N26, who came over from Europe and then have left recently. If you had an N26 card, then you lost your N26 card, and they were like, we need to give you your money back. And so they recently left. You've got TransferWise, who's kind of kicking around with a new card. Revolut, who has a card. And so there are a lot of challenger banks who are popping up, and they are wonderful for self-employed people. The majority of them are free. It's a great way to be able to segment your income and expenses. There's a ton of really, really cool things that you can do with not even business bank, but with a challenger bank that you're not able to do a lot of times with your other banks. So for instance, Monzo has pots, and you can stick money into different pots, and when it comes in, you can allocate it to different pots, and so you can.
Yeah, Starling has a similar thing. They call them goals, but it's super helpful to be able to save money for, like, I don't know, holiday or tax or whatever it is. So.
Totally. I think Starling. So I have a Starling card too. I think I have all of the cards, but just because I'm a nerd at these things. But Ann Bowden, who runs Starling, they're doing things a little bit differently, where they're saying they're building a bit of a platform, and they're thinking about it a little bit differently. It's a bit of a longer term approach in terms of like changing the way that banks think. But what they're doing is they're saying, hey, come to Starling as kind of how you have your base bank account as Starling, but then we're going to have a whole bunch of people, whole bunch of companies who can then link to or get onto their platform. And so then you can take your Starling information and point it out to, your invoicing company, and your invoicing company can look at that information and tell you when money came in or when it didn't come in. You can, so they're doing this integration thing.
It's like a marketplace play, isn't it?
It is. And I think it's a little bit different. I think a lot of people have talked about it before. I think she started doing it from day one. I think that was the plan. I think that was the plan from day one. And it's now starting to bear fruit where there's a lot of people who are on their platform. There's a lot of pretty cool things that you can do. They didn't have the hype that Monzo had. I think, Monzo had that crazy colored card. So everybody knew who had a Monzo card and it got cool and they grew. And then they recently replaced their CEO recently. So it's, but Starling has been doing some amazing things, and their platform is pretty cool. So I would, if you are looking at ways to segment out your business income, or your sole trader income, do look at those cards.
Yeah,
to potentially do it.
I've found it's completely changed the way that I look at my finances, if I'm honest, because I've just got it right there in the palm of my hand. I can see exactly what's gone out, which kind of categories. It automatically categorizes stuff. Starling's great. I don't work for Starling, but I think that somebody's asking about tied business accounts. Now, I've heard a lot of people having problems with tied business accounts. Certainly a lot of people within the sector who, for example, might have applied for Arts Council funding. They won't pay into tied business accounts. And a lot of these kind of C-bills or bounce back loans, same thing. Why is that? And what's the problem with it? And do you have any thoughts on that?
So I don't know. I haven't looked at exactly why some of those won't pay into it. We've only recently connected with Tide, so our platform connects to your business, to your bank account, personal or business, and your data kind of passes through. And so it was Tide, but Tide just came into ours, and of course you have your growing pains with anybody who just came in. So my experience with Tide has been that some people love them, some people don't. There was some question around, are they actually a bank, or is my money truly protected as a bank? And I think that might have been part of the question, part of the reason why they wouldn't put money into it, because they may not actually be a bank. But I'm speculating to a certain extent here. But I do know that they've got a heck of a lot of customers. They've got some pretty cool things built in from an invoicing standpoint. There's a lot of people who really love their Tide cards. There's a lot of small businesses who really enjoy using it and think it's great, and they've got some cool integrations, et cetera. And so I've found that it's not as good for self-employed people. I think that there's definitely some benefits, but you might have a little bit more functionality than you need as like a sole trader with a Tide card. And so I think as a small business, if you're a small business, it's great. If you have your own company, your own limited company, I think it's great. They've definitely got a lot of good stuff. As a sole trader, I'd question whether you might be paying too much there's too much stuff there that you might not actually use.
Yeah, I know certainly with Starling, you don't have to pay for it, but you do have to have a personal account before you can get a business account.
Right.
There was another question actually regarding credit rating. I don't know if do you know much about credit ratings and how they kind of work with different banks that you're in? And
so I do know a lot about credit rating. That was like my first job out of university was I was like a credit analyst in a strategy department doing credit strategy for credit cards. And so I know a good bit about how banks think about credit. A good bit about how banks think about business credit, and those are two very different things. So I'll talk a little bit about credit as an individual versus as a company, and how banks will look at it. So as a sole trader, remember you are yourself, and so as yourself, when you apply for credit, you apply as yourself. So there's no second entity, which means that if somebody ever says, "Hey, I want to give you credit based on your business," well, your business is you, so they're going to be looking at your individual credit, and whatever you sign, more than likely, I can't see any way that they wouldn't be able to do it, but more than likely you'd have to guarantee that with your own credit. And so if you defaulted on that, it would go on your own credit history. So even if you said, let's say that you have a photography business and you're like, "Hey, I want to upgrade my kit and I want to spend, I want to go and I want to spend 50,000 pounds and I need to get a loan to do this." And I think that the money that I spend, I'll make it back in terms of new business. And then that doesn't happen, and your business goes kaput, but you took this out as a personal loan. So even if your business goes kaput, the bank is still going to come after you personally. It's still going to be on your personal credit report. As a business, because there's a separate entity, a lot of times, if it's just you, banks probably won't lend to your business without what's called a personal guarantee. And a personal guarantee is just the way around saying, if your business goes kaput, I'm still going to come after you personally. As a business, and once you start lending to actual businesses, small businesses, et cetera, that loan could potentially be either against assets of the business. So let's say that you are a catering company or something. You have a bunch of tables and assets, and you've got a warehouse somewhere and whatever else. You can take a loan out against your business assets, and a bank will give that to you, so that if you default as a business, then the bank will come and grab your assets. But as a small business, as somebody who's self-employed, you more than likely are either going to be have the credit go against you personally, or at least if you have another company, or if you have a separate company, you'll probably end up having what's called a personal guarantee on it, which means that either way, they're gonna hold you accountable to paying for that particular loan.
And in terms of just opening an account, the credit shouldn't go against you, should it?
When you say opening an account, so
like
opening like a credit line. So there's something called an inquiry in your credit report. So as an individual, if you go and you apply for a bank loan, there's two different types of inquiries. There's hard inquiries and soft inquiries. Hard inquiries go on your credit report, and if a credit agency sees a lot of inquiries, and they could have changed this. This is going back a ways, but it was deemed a sign of risk if you had a lot of inquiries. So if you go out and you apply for 10 different loans, the question is, are you searching for the best rate, or are you so desperate for a loan that you're applying for 10 places? The credit risk of the individual for those two situations are very different. However, you can't tell the difference between the two. So that's the background of why people say, "Oh, if I apply for this, it's going to negatively impact my credit." So it's probably won't, unless you apply for a lot of them at the same time. And then there's the potential that they could look at you as somebody who is desperate for credit, which is a high risk sign.
Okay. Thanks, JD. Sorry, I have a few other questions that have come through, if you don't mind. So from Tom, what are the top expenses that sole traders don't claim for?
Well, I'll tell you about an individual pet peeve of mine is the concept of simplified expenses, particularly around your home. A lot of people will say, "Hey, just do simplified expenses. It's simpler." It is. However, to just make a blanket statement like that is a bit dangerous from a tax perspective.
Can you give us an example of simplified expenses?
Sure. So HMRC says that if let's say you work from home 100% of the time, there's a certain amount that you can claim per week that you work from home, and it's a certain amount for your home. I think it's £8, and it's a little bit it's like a little bit more, like £4 for your for your water and your electricity or council tax, whatever you have. your other bills on top of that. And so they say
A day.
Not a day, a week. So I'm pretty sure it's a week. So it ends up being a really, really low amount of money that you end up claiming if you're working from home. And if you are working from home 100% of the time, and let's say you live in London and you're paying more than £200 a month in rent, then it might be in your best interest to not be simple and not go the simple route and claim part of your home expense or your mortgage interest. It definitely gets a little bit more complicated, and there are definitely some potential pitfalls when it comes to that. But it really can work out in your favor if you take a little bit more time and spend the time to really work out what's the right way to do it for you. So, for instance, my partner, we have part of a room that is her sound studio. So we built her a little sound studio as a voiceover artist. And so for us, that room, most of the time is used for her work, like 95% of the time. If we have people come over, sometimes we might have them stay in that room. It's not pleasant because there's a sound studio in there, but people do it. So if most of the time we can use that, we can say that that's one room of 6 in our house. And so that's 1/6 of our expense. Therefore, we can write that off because she works from home, especially now, works from home 95% of the time. And that room is used for work most of the time. And so we can just do the math, and it ends up being, and we live in London, so it ends up being pretty beneficial, certainly way more beneficial than the simplified expenses. Now, I'm not saying that it's always the right thing to do, because it may not be. What my big pet peeve is that people don't, and sometimes even accountants will just say, well, it's easier to do it, so we'll just do it that way and get it done and get it over with.
Yeah.
But we really want people to pay attention to that.
Okay, I see Ben's just put another link into the chat for you guys who are watching this, so you can see about claiming expenses if you work from home. I'm sure we could go into more detail about that, but there are other questions, so I'm going to go to another one. This might be slightly outside the scope of this webinar. This is from Jamie. So as from next financial year, I would be freelancing for both UK and EU companies. The EU companies are now asking for our invoices to be done in euros and paid in euros. What's the best practice to account for these in the future? Is it best to get an online euro bank account and then convert it once a year into my UK accounts to account for it in my next year's tax return?
Okay, so if you, I'll try and make this pretty quick because I know there's a bunch of questions, but you have to figure out where you reside from a tax standpoint. So if you live in the UK, even if you work for an EU company, if you live in the UK HMRC is going to say, we want our money. We don't care how you make it, where you make it, where it goes, whether. But if you live here, we want our tax revenue. So whether or not it's in euro or whether or not it's in pound doesn't really matter. There are some complexities there that if you do make a lot of money, then definitely talk to somebody, because you could claim the remittance, but that's neither here nor there. So the second part of your question was around should I get a separate euro bank account, or should I get a bank account that I can put euros in? I think TransferWise has some that you can open up. I think I have a euro bank account with TransferWise, a British bank or a pound one, and a USD, because I transfer money back and forth between all those. I also used to live in Ireland, so I have an AIB bank account, but that's separate. So I think there are some pretty good options out there that you'll be able to use to be able to get paid in euros. What I probably wouldn't do is I wouldn't spend too much time with your existing, like an old school bank account, like let's say like a Lloyd's or a Barclays, because they tend to take a pretty hefty percentage when it comes to transferring that money from euro to pound. And you got to watch out for the fees and the spread, which is the difference between the exchange rate that they give you versus the actual exchange rate.
Yeah, I used to get screwed on that all the time with HSBC. It was a nightmare. And just while we're on the EU thing, because I know that there might be some people that trade with European countries, you do have to be aware of like their own VAT laws as well, because you might be liable for those VAT. Is that correct?
Correct. Correct. So I'm definitely not an expert when it comes to EU VAT rules. I was even corrected on a VAT rule for the UK. So I would say definitely do your research. If you're dealing with a big company, most of the time those companies will have guidance posted on their website, or at least they'll be able to point you towards somebody or some place where you could find the guidance that you need when it comes to VAT stuff. You're definitely not alone. There's definitely a lot out there that's on the internet.
Yeah, there's a company I know of called simplyvat.com. I don't know if somebody can type that into the chat, that would be useful. A question from Sarah. I know you run tax software, but is there any finance software that you would recommend that can help me control my finances and see my income and outgoings? I'm thinking that a couple of the banks that we mentioned earlier on might cover this, but do you have any other thoughts?
Yeah, so we do that too. So what as the line between what is finance and what is tax as a self-employed person or a sole trader is pretty blurred. So for tax, you have to track your income and expenses, and as general accounting practices or finance practices, you should track your income and expenses. So what we do, what our platform does, is allows you to track your business income and expenses. We also report what your income is by month. We give you your breakdown of income, breakdown of expenses, what your net income is, which are all the things that you need to run a business. So our goal in building Finmo is very much to help people run their businesses. And because it's such a blurred line with tax, it was pretty easy for us to say, all right, well, we have all this information anyway, so why not just do their taxes? And that's when I became an expert in self-employed taxes. So for us, we can connect any bank account in the UK. We think it's super important, which is why our app is free. So you can do this. You don't have to pay for anything with Finmo. Like, one of the things that we think is important is to stay on top of your income and expenses, whether you use us for taxes, which is how we make money. Whether you use us for your taxes is up to you, but certainly you can download the app, keep track of your income and expenses, use our portal to see that stuff over time. Connect your bank account. Doesn't matter really which one you use. We have most of them. I think we cover about 95% of people with bank accounts. But outside of that, there are a lot of, Matt, to your point, there are a lot of companies that will have that information for you. There's also a lot of personal tracking apps. So they escape me right now, but I think like Mint is one, I think but that's in the US, but there's a bunch of them out there. I mean, if you look up personal finance management, there's a 5 or 10 of them that are out there.
Yeah, the online banks are great. I've used Finmo. Now this is like the second year that I'm using it, and last year it really saved me a bunch of money. I actually paid for the accountant service, which was really cost efficient actually. But the value add is that you've just got somebody that's looking at your specific finances and trying to get the tax down for you, which is great. Peter, if you are claiming part of your home as workspace, is it true that when you come to sell your house, that part is now subject to capital gains tax?
So yes, and thank you for reminding me. I didn't bring this up before. So the answer to that is technically yes. However, what you can do is you can claim it as partial business, partial personal, and then that is not looked at as like a business part of your house. So the way I was explaining it with what we do, which is most of the time it's used as her office, but part of the time we use it as a guest bedroom, and because that's not a specific section that is only used for business, that is the way that we would, I don't want to say get around it, but it's not considered a business portion of that. So that is something to keep in mind for sure, which is if you do have space that's like your office, make sure that there are other uses outside of just your office with
So
that space.
in your example, for the self-employed side of that claim, you would say, yes, it's 1 in 6 1 in 6 rooms, but I only use it 90% of the time as an office.
That's right. So if you go back and say, look, here's my calculation and here's what I write it off as, then that's not looked at as business.
Perfect. Thank you. Do you know of any software to help with cash flow that connects with QuickBooks?
Not specifically. Cash flow is an interesting thing for sole traders. I know that there's not a lot of sole traders who think about their business in terms of cash flow. I think if you do have a small business, you probably are more apt to think about it in terms of cash flow. I think QuickBooks has their own cash flow portion of it that you might be able to get. I'm not 100% sure, but I know that there's a couple of companies who are trying to play in this space. I don't know them off the top of my head. I also know that there are a couple of companies who tried to play in this space and were unsuccessful. And that's when I stopped following them. But yeah, so it's an interesting space. Not a lot of self-employed people necessarily will think about their cash flow, especially if you are cash-based accounting, because that's basically your cash flow.
Maybe it's a bookkeeping question. Question just come in about the self-employment income support scheme payments. How do people account for those?
Yep. So they are taxable. So you have to account for those as income. So again, when you receive it, assuming you're in cash-based accounting, which the majority of self-employed people are, when you receive the money, that's counted as income and will be taxed on next year. So the government giveth and the government taketh away. Mm-hmm. But you get to keep the majority of it, and you don't owe tax on it until much, much later. So I guess the theory was, yes, it's income, but you probably won't owe taxes on it, at least until a little bit later.
Great. I think there's a couple more links that have come up about that as well.
Yeah, we've written pretty extensively on SEISS Grant 2, Grant 3, Grant 3B. There's a Grant 4 that's being talked about as of 2 days ago that doesn't have any details as far as I know. At least I didn't see anything that came out today. So there will be more. I'm pretty sure there will be more, and we'll write about it. So
sure. Yeah, keep an eye on the blog. One more question, I think. So as a fitness instructor, for example, if I train someone online in America, but I'm sat in my house in the UK, surely I'm working from the UK and not America.
Correct.
I think this is a question referred to when we were talking about the tax liabilities.
Yeah.
But I guess you're charging in pounds, wouldn't you? So
it doesn't matter what you charge in. You can get paid in USD, you can get paid in euro. The good thing about the EU and the US is that both countries will probably try and come after you for tax revenue. But if you file in the UK and you prove to the US that you filed in the UK, then you get a like a benefit of that. So it's not that you would be double taxed. It's called double taxation treaty between the two countries. You wouldn't get double taxed in both. So you would file, if you file in the UK, you pay taxes in the UK, and you live in the UK. So even if you make money online, wherever that individual is, shouldn't necessarily matter.
Great. I've got another question here from Amy. Hello, Amy. If I set up a little business as a different entity to acting work, do I need to register it as a different business, or can it be accounted along with acting work under the self-employment umbrella?
So the way that HMRC looks at this is they say that if you have two different trades, that you have to account for them differently. And it gets a little bit murky here. So let's say, so my wife does some acting stuff too. And so she does voiceover stuff and she does acting stuff. Now the question is voiceover acting? Kinda, yeah. Now, if she also drove for Uber, then I'd have a hard time saying that's acting. Maybe I can make a case for it. I don't think anybody would believe me. So if you can make a case to say that it's the same trade, then yes, you can account for them. You can account for them in the same group.
I used to do the same thing actually with like selling my photography services as a photographer, but then also printing photos, which arguably is the same business.
That's right. That's right. And so really the big difference is that you would just have to fill out two, what's called an SA 103 form, which is the form that you fill out if you're self-employed. So you would just have to fill out two separate ones, accounting for your income and expenses on one, and then accounting for your income and expenses on the other. We have a bunch of people on our platform who do this. I mean, I think I had somebody the other day who had 4 or 5 different jobs. They had like 2 or 3 PAYE jobs, 2 or 3 self-employed jobs. They were a driver for Uber, they were an actor, and they did some TaskRabbit stuff. And so they had 3 different SA 103 forms. Within our app, you can account for that. So it's pretty easy, actually. You just create you create what's called a separate job, and then you tag your income to the job that it pertains to, and you tag your expenses to the job that it pertains to. The little bit of the complexity comes around when you have shared expenses like home or cell phone or something like that. You have to allocate a percentage to each, and there's different ways to think about how you allocate. Do you allocate it on the total amount that you used it? Do you allocate the total amount that you made, time spent, et cetera? A lot of things to think about when you
There's a lot of things to think, and there's a lot of questions just come through as well. I'm going to go with one which might be relevant to a lot of people. Is what about universal credit?
Yep. So universal credit.
30 seconds.
Yeah, I believe is I guess the question is it taxable or not? I believe it's not taxable. One thing to think about though with universal credit is when you report your income from universal credit, there are different rules of what's income and what's not. So let's say you got a refund last year for taxes. That is income when it comes to pushing out for universal credit, where it's not income if you have to actually file your taxes. So I would say do your research. I can't be 100% off the top of my head, but I'm pretty sure it's not.
Yeah, just double check on that one. Thanks, Nerea. I'm afraid that's all we've got time for. This has been really, really helpful, JD. Thank you very much. Obviously, go and check out Finmo. Also, check out Curtain Call if you're interested. I'd like to bring back in Mark, who'll be able to tell you a little bit about the remaining sessions.
Amazing stuff. But we do have some. My name is Mark, by the way. If I forgot to introduce myself properly, I work for Shaw, doing marketing for the Pro Audio Group in the UK. So yeah, we're working with Curtain Call to put on these sessions. We've got 3 more sessions coming up. Each one is on a Thursday at the same time over the course of January. So I'm going to pop a link in the chat now that hopefully you'll all be able to see. And that will take you to the landing page where you can register for the remaining sessions. So on Thursday, we've got mental health and well-being. Is the next Thursday. We've got mental health and well-being. The following week after that, we have a networking session that John of Curtain Call is going to be running, and then the final session to finish off is our getting work ready session. So as we move into this year, and hopefully, with the rollouts of things like vaccines and really getting ourselves back to some sort of sense of normality, we can start getting back to doing what we do best, and we want to hit that ground running. So final session will really focus on that. So thank you ever so much for coming. We really appreciate that, and yeah, we hope you found it useful, and we'll see you in the next sessions.
Thanks for having us, Mark. Thanks, everybody.
Cheers.
Thank you.